people reach out to me, past clients, friends, talking about, hey, I'm interested in investing in real estate right now. I'm a first time investor. What do I need to know? And the first step I always say, hey, is talk to your mortgage broker. All right. Hey, Zach.
How's it
Uh,
going, Paul?
Good. How are you doing?
Good, man. Good.
Good. Good. I wanted to reach out to you because we were talking about first time investors. And I've had a kind of people reach out to me, past clients, friends, talking about, hey, I'm interested in investing in real estate right now. I'm a first time investor. What do I need to know? And the first step I always say, hey, is talk to your mortgage broker.
Yes, that is your first step, Paul. You are correct in saying that. And a lot of these times, clients like that will come to me, and we'll start with it. It'll generally stem from one of these like 3 or 4 questions, and it'll be like, how do I pay off my mortgage faster, or in half the time, or in 10 years? How can I sort of pay for my child's education in the future? Or maybe I don't think I have enough for retirement. What are some things I can do? Or how can I get my kids into the market, which is like definitely a bigger thing. It's going to be coming up a lot more,
Yeah.
I believe, because it's going to be so much harder for people to even get a down payment without a gift or without some sort of help. Even if your kid's a superstar job and superstar at saving, which most parents think their kids are, a lot of people are going to need that help. So those 4 questions can be answered with an investment property, essentially.
Yeah. I get a lot of the same thing. They're kind of looking for that either additional income to come in or create additional wealth, right? So when I send them to you and to say, hey, here's who you need to talk to, what is it you look at for them, or what do they need to know when they talk to you?
I think the first thing or best thing, and what's great about being a mortgage agent, mortgage broker, is that we can see their whole kind of financial picture, right? And especially as you as a realtor as well, I'm sure ask, what are your goals for 3, 5, 10 years? Because that's really going to place them in the place that they need to be. Is it that they want to move into this next property? Are they looking for generational wealth building? So that's a 15, 20-year goal. So it's really about seeing their whole picture. Or do they want to, what's their debt like? Are they trying to consolidate that? So we really have to look at every single piece. So that's sort of the first thing, is like, let's just have the conversation of where you want to be, what you want to do, and how quickly or slowly you kind of want to do that.
No, 100%. Like that's the initial conversation I had with them as well, is really, what is your goal into investing, right? And every investor I sit down and talk with, and the Zoom conversations is around, what are your goals? Are you looking for cash flow? Are you looking to make long-term money? What kind of investment do you like to maintain? Do you want to be hands off, hands on, commercial, residential? So there's all these preliminary questions going into kind of gearing them and directing them towards finding that right investment. And a lot of it comes down is coming up with the appropriate finances.
Yes, yeah, exactly. And a lot of it's also sort of changing the thinking as well, because a lot of people want to do like in a traditional investment, and they want to put, or even just putting in shares or something that's going to have a smaller sort of return on investment, but they think is safer. Where in the sense, because that's like the traditional thinking: get a job, get promotion, pay off my mortgage over 25 years, and then use either that equity or my investments, liquidate them to pay for my retirement. But it's not really creating wealth. Like, it's not creating that freedom to do whatever you want, sort of whenever you want with that money. Whereas investment properties will. I like to use this sort of example: is if you have your $100,000 in say equity or savings or whatever, and you go into your financial institution and say, okay, I want to use this money, I want to open a business then to create my wealth. Can I get, what can you do? I have 100,000. Can you give me more for a business loan? And most of the time they're going to say, you're a great little saver, go use that 100,000 and start your business. But unless you really have any experience with it, no. Or maybe even if you're lucky, if you have a great business plan, maybe they'll match you 100K.
Yeah.
Or same. So then you want to take it the more like shares or stocks or savings accounts, something like that. So you take that 100K in the same financial institution or a lender and say, okay, I want to talk to a financial advisor to invest this. What will you loan me my 100,000 to match? And they're going to say, again, you're a great little saver, but take your money and we'll put you as somewhere where they can place your portfolio, but not really. But that same 100,000 as a 20% down payment, and you go to a lender or a financial institution, they say, okay, yeah, that's 20%. We'll loan you 400,000. Sure, we'll give you 80% to go purchase property.
Yeah.
which really comes into terms when you think about risk. Think about if that's how the bank or the financial institution is looking at property as compared to those other investment opportunities. It's really something to think about, where you think it's sort of a riskier thing, but risk isn't essentially is not related to debt or how much money you loan. It's has to do with demand, control, and exit strategy, right? So is there a demand for the asset that you own? Do you have control over that asset? And can you get out of that? Can you sell that asset if you really need to get the heck out of there? So it's just changing people's thoughts on risk, because a lot of people think investment property, not for me, I can't do it, I'm just going to stick to traditional, where you can grow so much more exponentially with investing in property.
Yeah. And you have a tangible asset.
Yes,
Right.
exactly.
Unlike a business where it can be more based on you, you're investing in an asset that the bank can have security in.
Yeah, yeah, exactly.
Okay, so let's say that let's run a case scenario where a home buyer has saved up enough money in their house. They want to pull some of that equity out. Let's say it's 100,000 to invest into a property. How do they qualify? What are the steps that they need to do this?
So now that kind of goes back to sort of what we were talking about. So now I'm going to have to look at their whole situation, either doing a refinance on that mortgage or equity takeout, looking at their debt. Maybe we're going to roll some of that debt into that as well. And you're going to qualify at the same steps. A lot of these people, if they have equity, they've done it before, right? They've purchased a home, so they kind of know what they're in for. So it's about following those same things, but we're just going to move some of that money. It's just like exactly how you saved up to buy your first house. If they are a second, third time home buyer, they know kind of the steps already, and that's how we just got to come in, look at their whole picture, look at where they need to be, all their same income levels and all that stuff, and you're qualifying sort of at the same amount, but you have this backing of an asset now of your original principal residence, right?
Yeah, fantastic. Okay, that's good to know. Now, is there any differences between when you refinance their initial property, their primary residence, versus an investment? Like, how is that mortgage treated differently? Is there different terms that apply
Yeah,
to it?
there's definitely some difference, and different lenders are going to have different guidelines against those. So there's dealing with a mortgage agent or a mortgage broker is better, because we can look at all the different lenders, and their rules are kind of constantly changing, as mortgage rules are always constantly changing with everyone. But whether they take 50 or 80% of that rental, that or money you're making in from rent as income, there's sort of different GDS and TDS, which is gross debt service, total debt service levels that they're going to allow you to go to. So there are definitely different things, but that's more of a situational based problem, right? It's like, when you're going to buy that property, let's look at it at this current market and see which lender is going to be better to place you with
Okay.
for another investment property.
Okay. Are interest rates higher, or the mortgage term? Like, I know that the down payment required for a secondary property is 20%. Is there other terms, that investors would need to know about in terms of the mortgage?
Generally, yes, it is a higher interest rate, but right now, I mean, interest rates are crazy low. So even on rental properties and stuff like that, we can kind of swing it. Especially the variable rates right now are insanely low. So it's definitely a time where you should, if you are on the fence or have been thinking about it, that's something you should look into currently.
Yeah. Okay. If a property is not yet uh, let's say multi-units, and they're looking at converting, because that's often a strategy here in Toronto,
Yeah.
because it's so difficult to buy a finished product with tenants and guaranteed rent. Taking a property that needs some work or converting into 2 units or 3 units, how does a bank look at that in terms of financing? When an investor says, hey, I found this property, if I put this much money into it, it'll be this projected rents.
Yeah, so there is some legality behind it, because there's legal non-conforming or existing units already kind of have that, they're already in place and stuff like that. So changing it into multi-units is definitely sort of a challenge to make it everything all in line. But in terms of the way that banks and lenders look at it, it's also the same as your previous question. Certain lenders will look at it a little bit more loosely in the legal non-conforming, or different rules for per lender.
Yeah, 100%. Okay, good to know. All right. I mean, those are kind of the main questions I get in terms of what are the qualification requirements, what are the terms and the differences, and really how do they qualify? And it's really a case by case basis.
Yeah, that's exactly what I'm saying. It's really, and that's what's the benefit of using a mortgage broker, mortgage agent, is that we can see your whole case and place it the best for you. But that's why you have, like, you definitely should use one, because just going in sort of blind and just being at the will of your financial institution, you don't have that opportunity, or you won't have as many opportunities as you do working with someone like myself, and being able to look at all your options for you.
It is true. Like having, whether it's just the bank or just someone at the branch, isn't the same level of service, because it requires a higher level of input from your end to help guide people through the process as they look at different investments and consider different investments. And in real estate, it's all real time. So sometimes it's in the heat of the
Yes.
moment.
Yeah,
Having
right.
that ability to have that customer service and get those responses is super important.
Yes.
All right. Well, this is all awesome information. If someone wanted to connect with you to discuss investment mortgages, let's say someone are sitting on the fence listening to this and they wanted to connect with you about getting more details, how would they reach you?
So Facebook, Instagram, all that good stuff is Mortgages by Zac, just ZAC, or zaclofeudo.ca, Zac Lofeudo at gmail.ca as well, or just call me, 416-275-3649. Always on my phone, so give me a shout and I'll reach out.
Are we always?
Exactly.
Amazing. Okay. Well, I look forward to doing this again with you. I want to talk a bit about those teaser rates that we were seeing last week, the 1.99s and stuff like that. And, what's really behind that. So we'll connect
Yes.
again
Sure.
and have one of those talks.
Okay. Awesome, Paul. Good talking to you.
Thanks, Zach, for everything.
Cheers, buddy.